Good afternoon out there to all of our current advisors, as well as anyone checking out our YouTube channel for the first time. My name is Ryan from the Charts team, coming to you on July 25th with our weekly focus video. So we are in the red unfavored zone of our macro equity action call. I do have a lot of our advisors asking if they do get a new household or money in the door, what to do with it, if they have to be invested. Obviously, with cash and currency as our first and second asset classes, our recommendation is to be in as much cash or cash proxies as possible. So in this case, we take that household's money, put 50% in, leave it in cash, Canadian currency, and we'd come down here to U.S. equities. You can view the quick report. We're on Canadian mutual funds right here. The flag can be changed to U.S. as well as ETFs. So there's some options here. We always go with rank as the number one priority, and then the S-max of 6 or greater. So there's 3 options here under U.S. equity. If we come to commodities, we have one option here, the CI Global Resource Corporate Class, which meets that criteria. And if we come to international equity, we have the BMO Global Infrastructure Fund, which meets that criteria as well. So maybe you overweight U.S. equity, market weight commodities, and underweight international equity within that 50% that you're going to put to work in the markets if you have to put money to work. One example of this, if we come to models and we go to our SIA models, is we do run off the Canadian sector report, we run a 5 hypothetical mutual fund model. So you can come in and see that as we are in the red unfavored zone and we follow our full methodology, we are in the premium money market fund at the moment. But you can see that our compound annual growth rate since 2008 is 13.6%. Year to date, 3.28% compared to the S&P down negative 15.11 and the TSX Composite negative 10.55. And you could scroll down here further. You can see our monthly and annual returns, low drawdowns in 2008, 2011, and 2018 following our methodology. If you want to see exactly what's happening within this model, you can come down here to the fund selection process and the investment objective to get the breakdown. You can also follow this model and get trade alerts by clicking on the follow toggle here for any of our 7 hypothetical models. One other thing I'd like to show you within this video, if we come over to the dashboard, and I did a video 2 weeks ago on this as well, is you come over here to the backtest tool, click the disclaimer, and I'll show you a quick Canadian equity mutual fund report and what that looks like. Come down here to SIA Canadian equity. And what I want to do is I'm just going to update this and change the date. So we'll just do a 1-year back test. Let's just do from July of 2021 to today. We're going to do a 5 mutual fund holding. So say this is a little sleeve of a new client household that you need to put to work and you want to put them in Canadian equity for 5 funds. We'd come down here, let's say we're just going to hold the favorite investments and replace the remaining on a semi-annual basis. So we don't want to do a lot of trades, don't want those transaction fees. We'll run hypothetical back test. So from July of last year until this year, we are 0.18% in the positive, and year to date, we're only down 5.27%. Again, compared to the S&P down negative 15%, TSX down 10.55%. These would be the 5 holdings you're currently in. And you have a performance chart down here that you can change the time frame of, as well as change the date back to any month over the past year to see what holdings you had at that time. So the system is very powerful. If you're new and you haven't seen our system before, we do offer a 21-day free trial. If you are a registered financial advisor, if you're not a registered financial advisor, there's some links below in the description that you can follow of our morning newsletters and such. So until next week, take care and always strive to manage your risk in the markets effectively.